Welcome to The Explainer. Today, we're diving into a truly fascinating corporate transformation. The traditional TV landscape is facing some pretty unprecedented headwinds right now, yet Fox Corporation just wrapped up a record-breaking fiscal 2026. And if that wasn't enough, they dropped an absolute bombshell, a $22 billion acquisition of Roku. It's a massive gamble, so today we're going to unpack exactly how they pulled off this record year and what this massive pivot means for their future.
Here's our roadmap for today. We'll start with their record FY 2026 financial results, then move to the power of live sports, followed by streaming with Tubi and Fox One. After that, we'll break down that $22 billion Roku acquisition, look into their capital allocation and returns, and wrap things up with Fox's overall financial snapshot.
All right, let's jump right into Section 1, Record FY 2026 Financial Results, looking at top-line triumphs and bottom-line realities.
Now, in an environment where so many legacy media peers are struggling just to keep their heads above water and maintain their revenue, Fox actually managed to generate some incredibly impressive top-line momentum. They brought in $17.13 billion. That is a record-breaking revenue figure for their fiscal 2026, and it represents a really solid 5.1% increase year over year. That growth didn't just come out of nowhere. It was largely driven by super strong advertising demand and a nice boost in their digital distribution.
But, we really have to look at the contrast here. While revenue hit that record $17.13 billion, their net income actually dropped by 25.5%, and earnings per share took a hit too, declining by nearly 22%. So what's going on? Why the drop in profit while revenue is literally soaring? Well, it all comes down to expenses. Fox poured a massive amount of capital into sports programming rights, incredibly high production costs, and the initial launch costs for their brand new direct-to-consumer platform, Fox One. Basically, it's a classic case of spending money to make money. They're investing heavily in the exact same assets that drove those top-line records in the first place.
Moving on to Section 2, the power of live sports and how Fox is bringing audiences together at scale. We all know audiences today are incredibly fragmented, right? People are watching a million different things on a million different devices. But live sports remains the absolute undisputed king of television. Executive Chair and CEO Lachlan Murdoch really hit the nail on the head during their earnings call. He highlighted, quote, the unique power of Fox to deliver live premium sports that bring people together at scale. And wow, they definitely proved that this year. They anchored their programming with the broadcast of the FIFA Men's World Cup, literally mobilizing every single facet of their network. We're talking local stations, Fox Sports, Fox News, even their streaming apps, all working together to broadcast all 104 matches of the tournament. And that massive mobilization paid off for sure. Thanks largely to the World Cup, Fox saw a staggering 78% jump in their fourth quarter advertising revenue. But the thing to understand is that it's not just soccer. It is a structural dominance in sports across the board. They've secured their NFL broadcast contracts straight through the 2029 season, which basically guarantees stability for their single biggest ratings driver. On top of that, they benefited from additional MLB postseason games. When you add it all up, Fox actually topped all broadcast networks in live event sports consumption for the entire fiscal year. Think about that for a second. That is a remarkable achievement, especially when you consider that competing networks had massive, global events like the Super Bowl and the Winter Olympics during that exact same period. This kind of reliable, massive audience scale is exactly what advertisers are craving right now.
Let's pivot to Section 3, streaming, specifically Tubi and Fox One, and how they are accelerating digital growth.
So Fox is well aware they can't rely purely on the traditional cable bundle forever. They are executing this really careful balancing act. On one side, you've got your traditional pay TV viewers, but on the other side, there's this growing cordless population. By launching their new Fox One streaming service, Fox is actively going after consumers who just don't have cable anymore. And management made a really crucial point. The subscribers they are acquiring on Fox One are truly incremental. What that means is they aren't just cannibalizing their own traditional pay TV customers. They're actually finding brand new revenue streams while keeping their existing, very lucrative traditional distribution intact. Let's look at how this strategy builds with their other major streaming asset, Tubi. 110 million. That's a huge number, right? That is the monthly active user count Tubi reached by the end of the fiscal year. Tubi is entirely ad-supported, and it just delivered its highest revenue quarter ever, with revenue up 35%. To put that into perspective, and this is honestly wild, Tubi now generates 10 times the revenue it did when Fox first acquired it.
It is just a phenomenal digital success story for the company, and it's become a major driver of their overall ad revenue growth.
That brings us to Section 4, the $22 billion Roku acquisition, a truly transformative digital pivot.
Keeping all that streaming momentum in mind, we arrive at the most forward-looking and honestly the most exciting part of this explainer, the $22 billion acquisition of Roku. This isn't just a purchase, it's a monumental shift in their entire business model. Fox is evolving from simply being a content provider, someone who relies on others for distribution, into becoming a massive platform owner themselves. The deal was announced in June of 2026. And management has expressed a lot of confidence that it remains on track, expecting it to close by the first half of calendar year 2027. If they pull this off, it perfectly combines Fox's premium live content with Roku's leading streaming platform capabilities. But of course, while this deal presents massive potential, it doesn't come without some pretty significant hurdles. From a business perspective, acquiring Roku dramatically bolsters Fox's connected TV distribution and gives them unprecedented advertising scale. It makes total sense as a direct response to what consumers and advertisers need right now. However, a mega-merger of this magnitude predictably faces heavy regulatory scrutiny. Democratic lawmakers, including Senator Elizabeth Warren, have publicly warned of potential antitrust issues and are urging the Department of Justice to closely examine and probe the merger. So impartial observers are noting that the next year will be absolutely critical as Fox navigates this complex political and regulatory landscape to secure their platform future.
Next up, Section 5. Capital allocation and returns. Let's talk about returning value to shareholders.
Now, as an investor, you might be asking yourself, how does all this record revenue, the heavy sports investments, and a $22 billion acquisition actually affect the underlying value of the company's stock? Well, check this out. Since launching their buyback program in 2019, Fox has repurchased a staggering 36% of its total shares outstanding. That is $8.6 billion directly returned to shareholders just by shrinking the share count. And what's even more impressive? Chief Financial Officer Steve Tomsic confirmed that this buyback program is going to continue unabated, even while they work to close the massive Roku transaction.
Beyond the aggressive buybacks, Fox also pays an annual dividend of 57 cents per share. Now, at first glance, a yield of 0.92% might seem pretty modest, but the most important number to focus on here is that 14.84% payout ratio. A payout ratio this low is highly conservative. It means the dividend is incredibly safe and, more importantly, it leaves Fox with a vast amount of capital allocation flexibility. It's exactly how they can fund things like a $22 billion acquisition without starving the rest of their core business.
Finally, let's head into Section 6, Fox's overall financial snapshot and their core health indicators.
To bring this whole story together, let's do a rapid-fire look at the core health of Fox's balance sheet right now. Currently, Fox is holding $4.21 billion in cash against $7.57 billion in total debt. Management was very clear that they ended the year with the balance sheet exactly where they expected it to be to prepare for the Roku deal. The structure of that acquisition means they'll close the deal at a net leverage of about 2.8 times. Having this kind of solid cash foundation is absolutely crucial because it's exactly what positions them to comfortably handle the leverage required for this massive digital pivot. So how is the market pricing all of this strategy and execution? With a market cap of nearly $27.9 billion, this stock is trading at a trailing price-to-earnings ratio of 16.55 and an even lower forward PE of just 11.14. This tells us the market sees really strong future earnings potential relative to the current stock price. Add in a very healthy return on equity of 14.29%, and what you're looking at is a highly efficient company that is actively and successfully leveraging its assets to generate profit.
Which leaves us with the ultimate question. As the era of traditional TVs slowly wanes, will Fox's $22 billion Roku gamble successfully secure its digital future? Think about it. They have the cash, they have the unmatched live sports content that advertisers desperately want, and they have incredible streaming momentum with Tubi and Fox One. Now, it all comes down to clearing those regulatory hurdles and actually successfully integrating a massive tech platform into a legacy media giant. It's going to be incredibly exciting to watch this all unfold. Thank you so much for joining me on this explainer. Keep learning, keep questioning, and I'll catch you on the next one.